Hello everybody, welcome to today's fundamentals. Hello Peter, what's new in the FX market?
Well, we had a surprise turn of the US dollar, which edged a little bit higher. I would note that we had some financial releases which more or less tended to strengthen worries about the possible recession in the US economy. I would be noting the ISM non-manufacturing PMI figure, which dropped and implied a slowing of economic activity in the non-manufacturing sector in the US. It would be characteristic that the slowing came after another contraction of economic activity for the manufacturing sector. That was on Tuesday. Both were from March. So practically we see that economic activity in the US economy overall tends to slow down or even contract, which is definitely not good news. We highlight also the release of the ADP national employment figure, which came out lower. And we have to see the release also in conjunction with the release of the JOLTS job openings for February, which came out below 10 million. It was the first time, I think, since May 2021. So it seems to be the case that not only is economic activity slowing down, but we have also an easing of the tightness in the US employment market, and that gains additional attention given that tomorrow we have the US employment report for March with its NFP figure.
And how about US stock markets?
US stock markets had some mixed signals. It was characteristic that Dow Jones edged just a bit higher, but S&P 500 and NASDAQ were in the reds. That was for yesterday. I would be noting we had some news. We had some news from Walmart, which were quite interesting. Walmart announced that it will continue hiring new associates, etc., but the pace of hiring is expected to slow down. And they cited as the main reason for the slowdown practically the fact that consumers are turning to products which have lower profitability. Now, exactly the shift in consumer behavior would be an indication that most probably retailers, or if you prefer, customers prefer cheaper products. And that would be, in my opinion, also an indication of the overall economic situation in the US. A result of the overall economic situation, as practically, once again, that would imply that US consumers are less willing to actually spend more in the US economy.
And how about gold?
Well, gold yesterday remained relatively stable. It didn't actually show the classic negative correlation with the US dollar. We would expect it to drop a bit. It actually started weakening during today's Asian session. And should the USD continue to rise, we may see gold's prices dropping even further.
And what's new regarding oil?
Oil is an interesting case in the sense that, we had some very, very slight bearish tendencies yesterday, but overall, WTI prices remained at relatively elevated levels, which was set by the OPEC production cut decision. I would be noting, though, that we may be seeing a fundamental change, or if you prefer, a shift in the market's attention, in the sense that it seems that market attention is shifting away from the production side and placing more weight on the demand side of the commodity, and definitely possibility of the US economy entering a recession. Now that would be a signal, a bearish signal for oil prices, and that would imply that consumption of oil would be lowered, thus could have an adverse effect on its price as well.
And what's in the calendar in today's European session?
Well, we already had Germany's industrial output. It was for February. It slowed down, but not as much as expected. And that was a positive signal, given also that we had also Germany's industrial orders growth rate 2 days ago, which accelerated beyond market expectations. So the situation in Germany, which is considered the spearhead of Eurozone's economy, may not be as bad as expected, at least in the industrial sector. Mind you that economic activity in Germany's key sectors practically contracting, or at least contracted for March once again. So the outlook is still quite questionable. I would be noting though that we had also a contraction of the construction PMI figure for the Eurozone as a whole. So that would imply a retreat also in new buildings, etc., etc. We had also the similar indicator for March for the UK. That would be practically it, with the exception of Sweden. Now we had the GDP rate on a month-on-month basis, which slowed down from 2% to 1%. Okay, definitely that's not a positive for the corona. But it may not be as bad as initially expected.
And how about the American session?
Okay, given that we had a string of negative employment data in the US, I would be highlighting the initial jobless claims figure. It's a weekly figure, and should it show a slight increase, that would imply more or less that more people have lost their jobs over the past week. In the US, that would be one. I would be highlighting definitely though the Canadian employment data there for March. Usually they're being released at the same time as the US employment market data, but due to the Easter holidays, the Catholic Easter holidays, in Canada they are releasing them 1 day in advance. Now, the employment data in Canada are expected to show that the unemployment rate ticked up and the employment change figure dropped. Now, both indicators seem to align towards a slack being built up in the in the Canadian employment market, and could weaken the Canadian dollar. Mind you that the Canadian dollar yesterday weakened, and it weakened substantially. It snapped a winning streak of about 1.5 weeks. So that was an issue. It was interesting also the fact that the trade surplus of Canada was, for February, was slashed to a quarter of January's figure, which implied more or less that the Canadian economy benefited less from its international trading transactions. So overall, things are not looking that good for the Canadian economy. May I also add that should Canada's employment data show a deterioration, we may be seeing also Bank of Canada shifting its tone, actually solidifying towards remaining on hold. Maybe even we may see a strengthening of the dovish voices within and around BOC.
And in tomorrow's Asian session?
Well, tomorrow's Asian session is expected to be a rather easygoing one. Maybe there is an exception here with the release of Japan's household spending. A possible acceleration could provide some support for JPYs. That would imply practically that the demand side of the Japanese economy remains rather solid, but I think that will be more macroeconomically interesting, and the JPY may prefer to move more on safe haven inflows rather than financial data.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So, welcome to the technical analysis part of the presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Making a swift start with the US dollar index, we note that it was able to rise and actually float just above the 101.55 resistance line, maybe shifting a little bit to the right, the downward trend line guiding the index. It's a very, very interesting moment. It's almost a make or break position for the USD here. For the time being, though, we have to correct, or if you prefer, change the role of the first resistance line, the R1, and turn it into support line. It could be easily broken tomorrow, but for the time being, it's above it and seems to provide some slight support for the index. Let's go hunting now for the new ultimate resistance line, and in my opinion, should be here. There's an interesting level here in the sense that we have support provided, also here some support provided, and note here where it provides resistance. So this level was tested on both sides of the aisle. It's a very interesting level. It could go higher, however, that would be the next one. And that would be here at 103.75. Let's have a look. Yep, still stands. Good. Let's keep it. I know it's pretty narrow. The next one, though, would be somewhere up here. It's a nice upward movement, which was interrupted at this level. So there should be some resistance here. Well, the next would be the top of our chart, of the price action our chart. Let's widen this. Repositioning the labels. Okay. Definitely we have to correct the input. And starting with the S3, which is now being placed at 99.80. The S2 at 165. 100.65. Cancel. Let's move this a little bit. The S1 at 101.55. The R1 at 102.45. The R2 at 103.05. And the R3 at 103.75. Now one could discuss that the distances between the resistance lines are quite narrow and maybe a calibration should be in place. Yeah, but on the other hand, I feel quite comfortable with the levels noted, providing actually some reassurance that the levels are valid, so I'm keeping them. Let's lock everything in once again, sorry. Let's discuss direction here. Now it seems that there is a relative stabilization of the US dollar index, at least since the Asian session today. Just above the 101.55, it's indicative how the RSI indicator has neared and remained just below the reading of 50. On the other hand, though, we have a downward trend line which was shifted a little bit to the right, and it's still valid. So for the time being, we tend to maintain our bearish outlook. And in that case, I would expect the price action to drop, break the 101.55, Definitely I would require a lower low than this one. And we may see the index starting to aim for the 165 support level. On the other hand, should the stabilization be successful, I would expect the price action to remain just above or around the 101.55 support line. Yet the main element which would be signaling exactly the change of trend would be a clear-cut breaking of the downward trend line. And for bullish outlook, we would require, clearly a breaking of the downward trend line signaling the end of the downward movement. But I would also require the price action to start aiming, if not even reaching, the 102.45. Definitely I would like to see a higher peak than this one. It's a very, very interesting moment on a technical basis for the US dollar index. On the other hand, though, we have to note here that all the main moving averages we have on our chart, the 100 in orange, the 50 in green, and the median of the Bollinger Bands in blue, the 20 moving average, are pointing downwards. Especially the 20 moving average has not even picked up on the correction higher and the stabilization of the US dollar index. Give me a sec just to confirm. Yeah. So that should be it. For the US dollar index, we maintain a bearish outlook. Let's have a look at Euro USD. Now, Euro USD dropped yesterday. That was evident. But the movement as such was not so convincing, actually. For the time being, though, we have to note that definitely the 1.0925 has to change its role from a support line to a resistance line, given that the price action has moved it below it. 109.25. Let's go hunting for a new support line, a new S3. This seems nice. And you have multiple touches as well. Seems good. Okay, the next level could be here. Only one touch though. I would prefer this one. More touches in my opinion. Now we have it in green, and that would be the 1.030. We're adjusting the chart. We're adjusting also the levels. Repositioning the labels. Let's correct the content as well, starting with the R3, which is now being placed at 1.1275. The R2 at 1.1125. The R1 at 1.0925. The S1 at 1.0760. The S2 at 1.0525. And the S3 at 1.03. Okay, let's discuss some direction. As expected, given that we have moving averages in the US dollar index showing downwards, In this case, in EURUSD, it's reversed, and we can see that all three major moving averages are pointing upwards: the 20, the 50, and the 100. On the other hand, though, we have an RSI indicator which has reached and is actually running along the reading of 50, implying a rather indecisive market, which may allow the stabilization which was noted since the late American early Asian session to be maintained. It's a very tight range-bound movement here. You have also an upward trend line which seems to be ongoing. So for the time being, we tend to maintain a bias for the sideways motion to continue, yet we note the possibility of some bullish tendencies for EURUSD. So a small warning here. Should the US dollar weaken further, that would allow EURUSD to rise, break above the R1 1.0925, and start aiming for the R2 1.1125. On the flip side, should there be a stabilization, I wouldn't be surprised to see the pair remaining just below the R1 1.0925. It's going to be interesting to see how the American session is going to be opening, because we may see a more intense market sentiment there rather than in the European session. For a bearish outlook, we would require a drop, a breaking of the upward trend line, but also a breaking of the 1.0760. Definitely a lower trough than this one. So practically, yes, the pair has to reach, even break the S1 to give a signal that the bears are in charge. Quite interesting move. Let's have a look at cable. Here you are. Okay, the sideways motion was allowed to be maintained yesterday. Maybe edging a little bit lower, but it was interesting that it had hit on the 1.2435 support line, which more or less reaffirmed the validity of the pair, of the support level. Overall, we see the case for the sideways motion to be maintained. Some slight bullish tendencies could also be expected, given that we have once again moving average pointing upwards. At the same time, note though that the RSI indicator is just above the reading of 50. It's actually at 57.8, right? Yeah. So once again, some slight bullish tendencies may be present. Once again, for a bullish outlook, I would require the pair to rise and break the 1.2590. By the way, let's have a look where the R1 actually rests. Moving backwards, way back. Okay, nice peaks here. Yeah, 1, 2, 3, 4. There was some break, okay, but it had provided practically the upper boundary of the sideways motion here. Readjusting the chart. Now, should the R1 be broken, then the next possible level to be reached could be the 1.2775. On the flip side, should the sideways motion be maintained, allow me to extend the upward trend line, then it would be practically aiming or be on a collision course with the upward trend line. For a bearish outlook, I would require the pair to drop, break the 1.2435, definitely break also the upward trend line, but also to reach, if not even breach, the S2 1.2265. It's going to be quite interesting. Note how the S2 was reaffirmed here as a support line and here as a resistance line, as well as here. So it's a quite valid level to keep an eye out. Okay, let's have a look now. Let's have a look at safe haven currency pair USD/JPY. Okay, there was some slight bearish movement here, but nothing much. The pair remains comfortably between the 130.40 support line and the 132.55 resistance line. It's a very tight range bound movement. Once again, the relative inactivity of the US dollar allowed the pair to remain rather stable. Mind you, we have an RSI indicator which is, I wouldn't say pretty low, but still interesting to the bearish side, as it is at 39.8. It's even below the reading, just below the reading of 40. So there may be some bearish tendencies here, which may allow USD/JPY, if they intensify, to actually drop, break the 130.40, and a clear-cut bullish outlook. I wouldn't be surprised to see the price action start aiming, definitely not reaching, but at least start aiming for 128. Should the bulls take over, we may see the price action of USD/JPY being on the rise. We highlight the 132.55 as the first possible resistance line, and we may see the pair start aiming for the 135. Let's have a look at USD/CHF, the other safe haven currency pair. Readjusting the chart. Okay, some repositioning of the labels is required here. It's important that we have a very easygoing visual contact with the chart whilst trading. There should be nothing to make you hesitate, or at least make you look twice or three times even. You should be able to recognize the situation very easily. Now in this case, we see that there was a relative stabilization. Actually, the stabilization is being maintained after hitting, actually testing the S1 0.9020. In my opinion, despite a false break here, there was a reaffirmation. Maybe we see that the downward trend line guiding it has been shifted a little bit to the right like this. This time we see USD/CHF being in a make or break position. Now, should the downward trend line be the main element guiding the pair's direction, I wouldn't be surprised to see USD/CHF dropping, breaking the 0.9020, and start aiming for 0.8935. At this point, it would be interesting to see exactly where the S2 is resting. Give me a sec. Here you are. Practically, the level played a role of the low boundary of the past sideways movement during May up until mid-June in 2021. It was quite valid at the time, so we're keeping it. On the other hand, should the pair remain rather stable, we may see the price action clearly breaking the downward trend line and remaining just above the 0.9020 support line. Mind you that we have an RSI indicator which is actually pretty low. It's at 37, which could be implying that the bears have not exactly left the scene. For the time being, though, we tend to maintain a bearish outlook, yet we highlight the stabilization efforts of the pair, which may overcome the bearish outlook. For a bullish outlook, however, it may seem improbable, it's still a possibility and should be covered. In such a case, we would expect the price action not only to break the downward trend line, which would be signaling, if you prefer, the end of the downward movement, but also in this case, we would expect it to rise, break the R1 0.9115, and start aiming for 0.9220. Let's discuss a little bit the validity of the R1. We can see that it provided support here, here, aimed for, briefly broken here. Let's go further back, test it again here, breach slightly here. Overall, it seems to be a quite valid level. It was a support line though, and given that the price action has moved below it, has now been turned into a resistance line. On the other hand, with the R2, the 0.9220, I think that the level has provided resistance here, aimed for here, but also support and resistance again. So I think that's quite evident. Okay, let's have a look at commodity currency pair AUD USD. Okay, let's readjust the position of the labels once again to give us a clearer picture. There's a clear-cut sideways motion between the 0.6755 and the 0.6625, and that's been ongoing for a while now. Actually, since the 10th of March. Let's verify that date somewhere here. Okay, the 13th of March to be more exact. Let me highlight it in order to make it a little bit more obvious. Sideways motion is here and still ongoing. It's very, very interesting the fact that practically the main body of the price action, with very, very few exceptions, one which would be definitely clear-cut and notable would be this one. And the second would be here. So overall, the main body of the price action remains between the R1 0.6755 and the S1 0.6625. We tend to maintain our bias for the sideways motion to be maintained for the Aussie against the US dollar. I would be noting some slight bearish tendencies seem to be present, but nothing which would be actually pushing the price action below the S1. The RSI indicator is currently at 43.5. Okay, could be slightly bearish, but nothing conclusive. For the time being, and as long as the price action remains between the R1 and the S1, we maintain our bias for the sideways motion to be maintained. I would be highlighting though that for a possible bullish scenario would require a rise of the pair, a breaking of the R1 0.6755, and for it to start aiming for 0.6855, a level which provided support here. Okay, it was broken a couple of times, but I think that if we drill further back, we can see that it was providing support once again, and here and here. Let's have a look at the S1. Okay, definitely provided support a number of times. The S2, we have to unlock the chart, go further back here. Okay, it was a prior resistance line, that's clear. But given that the price action is above it, now it serves the pair as a support line. Now, should the bears take over, we may see the price action dropping, breaking clearly the S1 0.6675 and start aiming for the S2 0.6520. That would allow us also to draw a clear-cut downward trend line, possibly resting on the consecutive low peaks, and allow us to see also the possible limitations of the downward movement. Let's have a look at USD CAD. Okay, I would like to recalibrate a little bit the levels here. Definitely the R2, I would lower it a little bit downside here. That would be encapsulating the sideways motion here a little bit better. Let me highlight it. Let's do it again. Insert, shapes, rectangle. Here. Then we had this strong downward movement, which allowed the pair to break the 1.3665, which used to be the low boundary of its past sideways motion, but also to break the 1.3520, which used to be the S2. Now it serves as the first resistance line. The interesting element of the movement in the past 24 hours, practically to the first, is definitely the breaking of the downward trend line. That would be one. The second element is that there seem to be some slight bullish tendencies, which could be practically described like this. Let me drill into the 1 hour chart, show it to you in more detail. You can see that we have consecutive higher trough and higher peaks. It's a very, very subtle upward movement, but it's still there, and it's as if it's building up. So practically we have to switch our bearish outlook. That would be the first element. The second element would be to which direction. I would expect a stabilization there, and that's mainly due to the RSI indicator, which has leveled off at the reading of 50, implying a rather indecisive market about the pair's next direction, something which is more or less understandable. Yet note that on a technical level, we still have some bullish tendencies left, given that we had a slight upward movement here. The moving averages are pointing downwards, correct? Yes. But they actually failed to pick up on the slight rise of the price action of USD CAD over the past 48 hours. So I think that we would be seeing a more intense correction and flattening out first on the 20 moving average, then on the 50 moving average, and then on the 100. Don't forget, USD CAD is a very, I wouldn't say volatile, but very interesting pair to watch out for. We had the data which we had mentioned in the fundamentals before, and overall there seemed to be some hesitation of oil traders, which may also have an impact on the Canadian dollar. I would be noting though that we have today in the American session the release of the Canadian employment data, and tomorrow during the American session we have the US employment data, which may intensify volatility substantially for the pair the next 24 hours or so, actually 36. For the time being, we tend to maintain a bias for sideways motion between the 1.3520 and the 1.3365, but I would be noting the slight bullish tendencies. For a bullish outlook though, I would require a clear-cut breaking of the R1 1.3520, which provided support here and here, and the price action to start aiming for the 1.30. Let's have a look at that. 36.45. Didn't correct the label as well. Yeah, we recalibrated, did not correct the label. That's what happens when you don't actually promptly change the content of the label as well. Anyway, and then behind the R1, we note the R2 1.3645 as the next possible target for the bulls, given that the level has provided support a number of times here, but also resistance. So it was a very, very clear cut-off point for the price action. A bearish movement could occur if the price action drops, breaks the in the making upward trend line, which actually, by the way, could be a little bit narrower like this. So a bearish movement has to break this upward trend line, but has also to break the S1 1.3365, and that would allow us to shift the downward trend line to the right and extend it, showing us new limitations. Of course, a new downward trend line could also be drawn. But definitely for a bearish outlook, I would require clear break of the 1.3365. Lower true than this one, in any case. Okay, let's have a look at the Kiwi. Very, very interesting movement. Allow me to readjust the chart, reposition the labels. The downward motion is being maintained, but the price action has still to reach or even test the 0.6270 support line. So in my opinion, that's still not convincing enough. It's interesting how the reading of the RSI indicator has reached and seems to be leveling off just about the reading of 50, implying a rather indecisive market, which may allow the stabilization to be maintained here or to come about. It's going to be a very, very interesting movement. On the other hand, note how the moving averages have still not picked up on the correction lower of the past price action. They are all pointing upwards in different slopes, but still. And to tell you the truth, the fact that it has consecutive higher truths tends to imply that the bullish sentiment are still rather present. On the flip side, though, the fact that we had problems with the peaks not being sufficiently high tends to imply some stabilization. We have a correction lower back in the channel, and I wouldn't say channel, back towards the S1 0.6270. For the time being, a stabilization, in my opinion, is possible. For a bullish outlook, I would require the price action to rise, clearly break the R1 0.6360, definitely a higher peak than this one. And that would pave the way for 0.6460. On the flip side, should the bears take over, we may see the price action dropping, breaking this S1 0.6270, and we may see it aiming for 0.6190. That would allow us to draw a downward trend line exactly showing us the limitations of a possible bearish movement. Now we're moving now to the precious metal, gold. Okay, you have an interesting movement as the price action of gold has dropped below the reading of 2021. Actually, that pushes the level here, and it definitely turns it into a resistance line. The latest price action provides us practically with a more exact limitation on the upward movement resistance line. On the other hand, I wouldn't be shifting the upward trend line like this for the time being, at least. I'm keeping it. And I think that the precious metal seems about to break the upward trend line. On the other hand, though, before we move on, let's find a new support level. And I would be noting, let me lock the chart, this one. Note there's multiple touches here. Okay, some commotion. I'm keeping that. Locking it in. And that would be in green, ladies and gents. The 1918.5, 1918. It in. Let's reposition the labels, and let's also correct the content. Starting with the R3, which is now being placed at 2100. The R2 at 2070. The R1 at 2021. The S1 at 1994. The S2 at 1960. And the S2 at 1918. Once again, locking everything in. For the time being, we tend to maintain a bias for the sideways motion of the precious metal to continue, yet the fact that we have an RSI indicator which is quite high, it's at 65.7.8, actually may imply some bullish tendencies once again. Yet for a bullish outlook, I would require a higher peak than this one. Thus, the precious metals price has to break the 2021 resistance line and start aiming for the 2070. That would allow also the upward trend line to shift a little bit to the right, highlighting exactly the limitations of the possible bullish movement. On the other hand, should we see the bears taking over, we may see the price action. Give me a sec. My OCD kicks in here. Now, should we see the bears taking over, we may see the price action dropping, breaking the S1 1994 and start aiming for the 1960. It's quite obvious where the levels being based, so that's not an issue. On the other hand, though, I would say that a bearish movement, okay, it's possible, but for the time being, does not seem to be probable. It would require considerable weakening of the US dollar, strengthening of the US dollar to push gold's price far, far lower. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
everyone, my name is Emily and welcome to another of our great educational trading videos. Today we're going to look at day trading. Day trading is a very popular short-term trading strategy that involves the buying and selling of financial instruments during the trading day in order to make a profit from small price movements. The most important rule of day trading is that traders need to close out all their positions at the end of the trading day. Generally, the day trader aims to take small profits that can add up during the day or trading period, while at the same time minimizing their losses. While day trading is a viable trading strategy for many experienced forex traders, beginner traders could find day trading to be challenging. Without a well-defined trading plan and the discipline to adhere to its rules, beginners might be overwhelmed by the stress of intraday trading. Day trading strategies can differ from longer-term trading strategies as they focus more on profiting from shorter-term movements in the market compared to moves that take place over a number of days or weeks. In this respect, day traders need to be continuously focused as markets can move suddenly in the short term. Overall, advantages of day trading include instant results and no overnight risk. On the other hand, the disadvantages include requiring a high initial deposit to make substantial profits, less time to think, and there is also a risk of overtrading. Thank you so much for watching us today, guys. Bye-bye.
Before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're going to be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm going to introduce myself, a little bit about myself. My name is Cassandra. You can call me Cass. I am an investment analyst for the award-winning research firm Everett Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I worked in the bank. I worked with the airlines. I was an air hostess. I majored in law and majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month with without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken Heishi has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering like, yes, I can see your screen, I can hear you clearly, but today no one's answering. So I don't know if there is something wrong with the chat box. But the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask in the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, so what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys on the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's gonna be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy, that is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. you know how a lot of time price is going in an uptrend, it's going in a constant uptrend or it's going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EURUSD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Ashi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Ashi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Ashi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Ashi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Ashi and the normal candlesticks is that the Heiken Ashi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Ashi, no matter where the close and start is for the normal candlesticks, with the Heiken Ashi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heiken Ashi and a little bit of understanding. So the Heiken Ashi is a type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heiken Ashi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heiken Ashi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, that can actually have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle or somewhere in the middle of the last candle. Okay. Okay, so what is the Heiken Ashi formula? Why does the candle start in the middle of the last candle? So the Heiken Ashi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heiken Ashi candlesticks. So the open, which is here, the open of the candlesticks, it is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks and you divide that information by 2. Okay, so okay, let's pretend this is the current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why the HA, the Heiken Ashi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you're doing charting. Okay, so the high is the maximum value from the high and open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heiken Ashi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heiken Ashi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is a difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? For those who are like a little confused, you don't have to worry. Like when we go to TradingView later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Ashi chart? There are a few ways to trade using the Heiken Ashi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Ashi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting. There is a bearish rejection, and you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're going to do is you're going to see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay? Everyone good for now? Okay, cool. I'm going to show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing, or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Ashi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use a Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way, you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course, it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, trend, that downtrend may be ending, okay, and it is losing momentum, and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlesticks display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping, day, or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long-bodied red Heiken Ashi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Ashi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're gonna create a strategy. We're gonna move on to TradingView to create a strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of $250, $1,000 or $2,000. You get an account. Silver is $1,000 and gold is $2,000. Okay, so what is good about this is that every day we will update these charts. So you can see here, we will update these charts we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP group. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We will show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line. And then you can ask one of us, hey, Desmond, or maybe, hey, Cass, sorry, hey, chief trader, or whoever it is who sees your message, is this a valid trend line? Okay. And then now you can highlight the trend line. You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear, okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches. But in this case, this trend line only has 2 touches and therefore it is not a valid trend line. Okay, so you can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and need help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, or Heiken Aishi for today, the turtle trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help you trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really, really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to TradingView, where I show you guys how we can use the Heiken Aishi. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken Aishi, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken Aishi. So there's different kinds of candles that you can use. This candles is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken Aishi, so I will show you guys how to use Heiken Aishi. Okay, so click on Heiken Aishi. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joash. Okay, so let's zoom in because this is really important. The way that you use Heiken Aishi on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things. Okay, always combine it with trend, support and resistance, Fibonacci levels. Please share screen. Thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say, let me just go back to your normal. Okay, it will say, go to any particular chart. It will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow. Candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Aishi, okay? For today's topic, we will be looking at the Heiken Aishi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little to see if you guys were following earlier on. I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. This is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify a trend, and you need to identify it on a bigger time frame so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA or the different way of TA is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right, you use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got it in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken Aishi has not told you to come up from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use the trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal because of the break of channel. Number two, Heiken Aishi is confirming that. Okay, let's see what else. Number three, the break of this swing high is further confirming if price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take note this for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend, I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support and resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now, what we're going to do is combine. Okay, we're going to combine Give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very, very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I'm a bit biased to get in for a sell right now. Okay, we're gonna get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's gonna be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is. Because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi. The day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this sell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together. And then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? There is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm trading. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's a 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the the candlesticks showing that reversal pattern. Number 2, the Fibonacci level. Number 3, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, it didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know. But so far, the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support and resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest. I don't think this is a very strong door. I think there is some kind of resistance in this door. But if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area. And then from here, he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784. Okay, because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's nothing to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis, or the charts is showing you, and then you make a decision. So based on all the decisions that I've collected, I am a little biased that the bullish momentum has weakened, and there's a possibility of a short pullback, a very short pullback. Okay, a short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500. Okay, a short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2. Okay, 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay, usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have $100,000 account, I'm risking $500 to make $1,000. Okay, And that's exactly how you would be able to find a trade using the Heikan Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things, okay? I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heikan Aishi. I'll be using the strategy that I normally use. I do use Heikan Aishi once in a while, okay? But then I usually, on a daily basis, I just use the traditional Japanese candlesticks, okay? Look, the traditional Japanese candlesticks is showing bullishness, okay? But Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye, guys. Thanks for joining. Bye.